Now I'd like to introduce Reed Getz with Hillwood to talk about the industrial market.
Thank you, Cannon. A good rule of thumb is that when you're the last presenter and you got to stay on time and you've got two mayors and one judge waiting on you, don't run long. So we will be quick through what has been a really remarkable 2021 for the industrial market here in Tarrant County, Fort Worth, and DFW. And if you've got a couple takeaways that you can leave today with, is that this is a year of milestones, record growth at every kind of fundamental level that we've ever seen, and that Fort Worth is a Tier 1 market, and the prominence of what we're doing here in Fort Worth and Tarrant County and DFW can't be understated. So with that, we'll get going. On the national front and where DFW sits, DFW is now a billion square foot market, the second largest in the U.S., just behind Chicago at 1.3 billion square feet. 7 years ago, we were the fifth largest in the country, so you can see the growth there. Under construction, all-time high of 61 million square feet, number one in the U.S. DFW has been number one in the U.S. under construction for the past 7 to 8 years, so that has been a common theme. Net absorption is remarkable, came in at 44, almost 45 million square feet, all-time high, number one in the U.S. And to put it in perspective on a national basis, Chicago, which is the largest market in the country, we were 10 million square feet higher than that. So dramatic increase in business growth here in DFW. And vacancy rate has stayed at a historically low 5.3%. You can see the 30-year average there. Just a few of the numbers. So in the blue this is a 10-year look back. So blue is net absorption. Orange is net deliveries, and the white line is vacancy. A doubling of net absorption from 2021 to 2020, but about a 20% decrease on net deliveries. A lot of similar themes that Drew mentioned in multifamily that we're seeing in industrial: slower starts, balled up in supply chain and material delivery issues, longer lead times in terms of working through development, permitting issues, with a lot of that being virtual during 2020. So that number is down, and it has made a dramatic decrease in vacancy as the explosion of growth that we've seen, largely driven by e-commerce. This is a slide that we had last year, updated to this year, of quarterly e-commerce sales, starting back in Q3 of 2020 to Q3 of 21. You can see what everybody was doing home, ordering goods, and really the structural change in the way in which consumers have their goods delivered. So remarkable 30% plus growth. It's moderating down in a single digit, but for 2021, it's going to be about a 17% annual e-commerce sales growth, which is above past 10-year averages. So we see that trend continuing. Also, what's driving demand is the shift in just-in-time inventory supply chain models to a just-in-case. Obviously, the pandemic disrupted a lot. Suez Canal and price of oil going to 100 and negative. All of those things have had structural changes in the way in which companies are building supply chains and therefore having to rebuild the distribution network of the country and the world. So when you have that spike, that doubling of absorption with diminished net deliveries, you can see what's happening to industrial rent growth. This is a stunning trend when you look at growth rates of 2 to 3% on a historical 30-year average. It's 2 times in 1 year, going from 5% to 10%, and we see that trend continuing. So DFW Class A industrial cap rates. This is a pretty quick snapshot of March 2020 to today. The yellow line is cap rates. These are actual transactions done in the Class A market in DFW, and that white line is the 10-year Treasury. So if you owned an asset in March of 2020, same rental rate, same asset, you fast forward today, your value has gone up 50%. Incredible. Particularly within the last 6 months, there's been a 70 basis point shift. All of that in a rising interest rate environment. At the end of the year, we were at 1.6 roughly 10-year Treasury. What this tells you is the continued trends of institutional capital, increased allocations to to industrial, and a belief that this rent growth trend of 10+% is going to continue for the near future. So good tailwinds there. So when the market looks as good as it is, what do we developers do? We build. 61 million square feet under construction at the end of 2021, double that of last year. As a historical average, it's 27 million square feet here in DFW. A positive sign of that is that 30% of that is basically pre-leased. And what we're going to see, because of just labor issues and supply chain and material delivery challenges, the net deliveries are going to extend out from what may typically be a 6 to 9 month delivery to 12 to 15 months. So that will extend out those deliveries as we see in the coming year. So where does greater Tarrant County market fit? It's all of those numbers. It's a major player and continuing to grow. And what we're seeing is scarcity of land throughout the market overall is going to benefit what's happened on the west side of the Metroplex, continued with explosive population growth. So we're going to do a quick run through and dive into all of the different submarkets, really along I-35 and west of Fort Worth. We're going to stay away from the middle of the market because there's just so much activity. And what we hope to be able to achieve is to show you the significance of each one of these markets as it relates to the nation. We'll start with Alliance, as it relates to DFW, we'll start with Alliance, Texas, which has really come into its own in terms of a submarket. We've prepared a video that shows all that's going on both in industrial distribution manufacturing, but to Jessica's point earlier of communities that will engage and build industrial like Fort Worth and our public partners throughout Alliance have done. You can see what happens with the growth and attraction of a market over time, because Alliance, Texas did originally start as industrial. So that is what we refer to as the epic trailer of Alliance, Texas. Innovation, growth, all of those things at play, and as you drill it down into the numbers, the Alliance, Texas submarket is now the largest submarket in all of DFW. Under construction, we're number 2 with just about 8 million square feet, and net absorption at over 7 million square feet, number 1 in DFW. Vacancy rate is a little bit high at 11, almost 12% due to a lot of the deliveries of spec, but we expect that to absorb quickly here. From a Hillwood perspective, the industrial team has had a fantastic year of over 6 million square feet of leases signed. We're under construction on over 2.1 million square feet of spec product, and we've acquired over 226 acres of land. So continuing to invest into the Alliance Texas program and here in Fort Worth as we see decades of continued growth here. So what we're going to do, we're getting short on time. We're going to go through the market and hit as many individual buildings as we can. This will be posted online so that you can come back and see it. But we'll start with Alliance Center East 1, the largest spec building that Hillwood has announced and started construction. We'll complete that in second quarter of 22 on I-35 in Alliance. We signed 800,000 square foot lease to Henry Schein in our ACN 7 spec building. We started construction on 2 buildings that total 883,000 square feet, a 441 and a 493. 493 has been pre-leased, and those will complete in third quarter. We completed 1 of 2 Amazon AMZL last mile delivery centers. So if you see your package and you live in North Fort Worth, if you see DDF5, that is the facility that it comes from. So in the Northport, we completed a lease with Main Freight and 460,000 square feet and over 408,000 square feet of leases with Smart, Crown, and Walgreens. That Northport package is out on the market, and so benefiting from the low tax rate that North Lake Denton County does provide there. We signed a 1 million square foot lease with Walmart. This is their 3rd e-commerce facility within Alliance, Texas. Alliance was actually the Walmart's first e-commerce center location in their entire network, and so we continue to grow with them here. Too Simple that you saw on the announcement, autonomous freight trucking hub here in Alliance, and you can see just to the left-hand side the building that we've built with them. We have worked with them. You saw the press release of incorporating their autonomy and freight trucking design into our spec buildings, so that Alliance, Texas is the innovation hub of autonomy and then future drone delivery. In the Gateway, we announced MP Materials, which is a magnet manufacturing plant, so sourcing from U.S. domestic rare earth materials, which is critical for supply chain as you think about everything that's happening in the automotive industry, and MP will supply GM's electric vehicle magnets for their electric vehicles. We signed a 960,000 square foot renewal with Albertsons in Gateway 50, one of the first buildings in Alliance, Texas. Moving over to I-35, Trammell Crow has started their phase 3, a 1.2 million square foot spec industrial building, and they'll have 4 more buildings that total over 2 million feet that they will start. Falcon announced a large project, 2.1 million square feet, 4 buildings under construction in Northlake. Just to the west of that, Scannell is under construction on 2 buildings that total 1.4 million square feet. Their largest is just under 1 million. Exeter leased 441,000 square feet to ADI. And LaSalle leased 351,000 square feet to IDC Logistics. Moving down to the south, 167,000 feet leased in IDI's building. Hopewell Development, new developer, Canadian-based, that into the market just south of Speedway, under construction on 3 spec buildings with 361,000 feet. LBA acquired 1 million square feet and leased 18,000 square feet up at Elizabeth Creek Gateway. And back behind, DHL announced a 1.2 million square feet. So a lot of activity in that over 1 million square foot market. TA Realty acquired Northlink's 1 million square foot 2 building project and leased 140,000 feet to Challenge. Northpoint leased its 700,000 square foot spec building to an undisclosed user that will come out here shortly, but also launched a 1 million square foot spec building just behind it in the Westport part of Alliance. Stonemont under construction on 213,000 square feet on 156. Provident completed their 568,000 foot spec building, unleased, but will happen soon. And I'll pick it up here. New Wellness leased 277,000 feet, and Clarion Partners on Westport and Green Weber leased over 1.4 million square feet in their 3 building spec program. That is out on the market for sale. Lovett signed a 600,000 square foot build-a-suit lease in their 2 building project on Westport Parkway. TCRG signed over 700,000 square foot lease to Woods Distributing on 35 and Golden Triangle, so moving south down 35. Stonemont's under construction on 2 buildings at 486,000 square feet. And Jessica, M2G Ventures, fantastic project, completed right on 35, 644,000 square feet. Did sell a building to Paper Source and did a lease for 60,000 square feet, so soon to lease up quickly. Moving down to Mercantile Railhead, Fossil Creek, a market obviously with fantastic transportation, 35 and 820. Significant construction that we've seen in this market, unlike years before, starting with Transwestern's development of Cowtown Crossing. So at 287 and Harmon Road, over 1 million square feet in 3 buildings, starting just a couple of weeks ago. East Group at their Basswood 35, under construction, near complete on 2 buildings, spec still available. CBREI's, this is over on 820, the 820 exchange. LGE is the developer, 72% leased. They did sell that building to CBREI and set a record for that market at the time, but as we've seen every month that goes by, we cross through new pricing thresholds. Moving down to the south in Mercantile, build-a-suit for XPO, under construction by Mercantile Partners, and Ironwood Realty is under construction on over just about 1 million square feet in 2 buildings just south of there. More to come in that Mercantile market next year as we'll see more announcements on new development occurring. Dolphin leased over 283,000 square feet in their 1 million-foot project. Crow Holdings on the west side of 35, under construction on 2 buildings of 540,000 square feet. And in the background is McCormick Development with their Mercantile Commerce Center, 330,000 square foot spec building. Moving out to 183, Stream they completed their 491,000 foot 3-building development of at least about 7%, and has a lot of activity on the balance of the space. So quickly, West Fort Worth, really where we see a lot of growth and potential. Obviously, a lot of publicity and fantastic work by Fort Worth and all of our partners here to attract the Rivian deal, which even though sometimes the best deal you get is the one you don't make, and the publicity and the national recognition of what that does for West Fort Worth is something that's going to really push this market, I think, into the next phase of development. And there's significant landowners. You've got Walsh and PMB and Majestic that own over 3,000 acres of potential industrial land, so big growth opportunity there. Forefront did sell their 3-building development to Brookfield, over 380,000 square feet, which is still available. In South Fort Worth, a market of significant growth, number 3 in DFW in terms of construction, and number 4 in net absorption. So a market that hadn't grown really since 2017, flat for about 15 years. Has exploded. This is Forefront, Greenwich property just out to the east of there, and their 600 spec. But as you look at here, this is 820 and 35. We'll start there and move south. Industrial Realty Group completed their 212,000 square foot spec building. Jackson Shaw, which was pre-sold to Nuveen, under construction on their 562 3-building project, near completion there, still available. Carter Distribution Center leased over 700,000 square feet within their 4 buildings, which really speaks to the volume of some of the absorption that we're seeing in the smaller space sizing in the market. Crow Holdings, under construction, one of the largest projects in the market, 1.9 million square feet of total space. Home Goods is a 1 million square foot build-to-suit lease that they build there. You can see that under construction on the left-hand side. Black Creek did over 289,000 square feet of leases in their spec project in Carter Logistics Center. Moving to the south, Everman Crossroads completed 2 buildings developed by Bandera but sold to MDH Partners, and they did a 300,000 square foot lease to Purina. IDI Logistics under construction at Everman in 35, leased about 194,000 square feet to Dullimer. And Majestic Realty, 900,000 square feet of both leases and spec product under construction just on the west side of 35. Van Trust completed a 670,000 square foot spec building that is available, and just to the south of there, TCRG under construction on their 178,000 square foot spec building, one of a 3-building project, and that building is leased. And just to the east of 35 on Risinger Road, Risinger 35 Logistics Park, this was Hillwood's second last mile distribution center for Amazon that we completed. So if you see your package and you have DDF6, that's where it comes from. And just to the east there, we've got sites that can accommodate over two 1.2 million square foot development sites. And the furthest south is Ascendant, who leased 800,000 square feet to Saddle Creek, and they're close to announcing the next 1 million square foot development just to the south of there. So much like Drew, in terms of looking back and predictions, didn't do quite as well, and not really ashamed to say that. Predicted 1 million square foot building deals in in Tarrant County. We did 2, and then we had a 976, so close there by 20,000 square feet. New West Fort Worth project announced. Somewhat, Rivian deal obviously was announced. DFW absorption remains over 20 million square feet. I did get that one right. We were at 44. Vacancy rate at 7.5%, not even close. So missed on that one, and I should have known better than to bet against the GOAT in the Super Bowl, and Chiefs certainly didn't win. But looking ahead to 2022, I do think that the big bulk market is going to continue to grow in greater Fort Worth. I think 4 1 million square foot deals will occur. DFW absorption, I think, remains above record average highs in 35 million square feet, so a lot of tailwinds to push that there. I think that we'll see a little bit of creep up in vacancy rate to 6.5%. It would take well over 40 million square feet to absorb the space we have construction to maintain that at the same level, so we will see a creep up there. I'm going to get way over my skis and predict things that I have no business in predicting. So 10-year Treasury, stay below 2.25% by the end of the year. And then politics, I think Republicans have a chance to take the House and the Senate. So thank you for today, and turn it over. Oh, also one more thing. I can't do this without the help of so many in the market, and so every local firm here that you see listed had helped in putting this presentation together, and specifically in our office, Grace Larson and Deborah Hale for all the imagery and everything that we've produced today. So thank you.